Hi, this is Randy Finney with the Right Side of the Chart, and today is Thursday, July 11th, 2019. It's about 3:30, a little after, so we have half-hour trading to go. And what I wanted to do is just a quick potpourri of trade ideas, analysis, my thoughts, and a quick how to find what you're looking for on the site. We'll start out here with just what's going on in the broad market. Not much today, so let's not try to extract too much from today. QQQ is down a little. SPY is up just a hair, almost flat. And we're still above. Remember, QQQ recently broke out above those recent highs, but it was several things. It was not impulsive, not a very big. It wasn't bad volume, but it wasn't great volume either. It was a little bit above, or right about maybe on par with the recent average if you go back, couple months. So there was that somewhat of a sign of non-confirmation, although price is first and foremost, so we did break out. So you want to watch and see if we fall back below that 191.44-ish level, really below this cluster recent highs. I'll say this, and I often do, quite often when a stock or the index breaks out, it'll come back to back test the breakout, even if it goes a little higher, and it doesn't do a perfect back test. It'll usually come back in a little and kind of fake everybody out. So in other words, don't think that the second you move down below those previous highs, that's a failed breakout. I mean, technically it is, but you want to see impulsive selling. And if you move below this cluster right here of these recent candles, that would most likely open the door and seal the deal. And again, it's how impulsive and what do the candles look like in the price action if we move on down through there. So let's not get too much into the broad markets now, because I will do a end of day update. But what I wanted to talk about a little bit is how to find what you're looking for on the site real quick. I get the same questions asked all the time, and I want to say that is absolutely fine. There's a lot of information on the site. It's in all different places. Some of it's in the trading room. Some of it's on these front page posts. Sometimes I'll do videos that last 10 minutes. Sometimes they last up to 40 minutes. And I don't expect everyone to watch 40 minutes of a video. You may not have time. You may not have the inclination. So feel free to ask me. And what I'll do is, if I made an update recently, I'll just find it and post a link there for you. So this is what you'll see when you're logged into the site and you hit the home button, or you can click on this right side of the chart logo up here, and that'll also load the front what we call the home page or blog page here, without all the graphics that the front page has when you're not logged in. So that's, of course, the latest posts, front page posts, both silver and gold members can access. And I encourage you to come back here from time to time, especially if it's on a topic that you're interested in. Let's say, for example, did the gold GDX analysis recently, and so you can see now there's 8 comments. That'll include replies that I've made. You can click on the little comment button. It'll bring you down to the latest replies. Sometimes I'll post additional charts, like I did for a member who was asking for some long-term trade candidates for the next leg up, and I posted a series of silver mining charts there, and I've got a couple more questions I need to get back to there. So that's one way to keep up with the site. Of course, if you're a gold member, you can come into the trading room, where 90% plus easily of the content, market analysis, my thoughts, trade ideas, I post here. Now, some of that, especially the more important stuff, trade ideas that really start looking very compelling, they will most often, not always, but most often, I'll try to include some of that on the front page. And what I'll make a point from doing time to time is just kind of updating everybody on what's going on there, because again, I know a lot of you work full of part-time jobs, or maybe trade part-time, or you're retired and you just don't have the time and inclination to sit in here, sit in a chair for 12 hours a day like I do, looking at charts and answering questions. So when you come into the trading room, if you click on anybody's user icon or gravatar, whatever that thing is you call up there, the little picture, there's mine, it'll then bring you down to all the posts from that person right there in order. So you can see the last update I made in the trading room was 16 minutes ago, and click the read more. If you want to see, that's a reply. Obviously, you can see a comment. I commented to somebody's question. If you want to see the question, just click view conversation and it'll loop you to that. They asked if I was going to make the MDCO trade idea official, and there's my reply. My reply was this: there's a couple of things. Number one, I've been quite hesitant since coming back from vacation to add back new trade ideas. As you know, I made it clear the technicals, there's too much in the charts right now. Divergences, non-confirmation on the breakout, market rising on what the Fed is doing recently. But again, I said there's cross currents there. I talked about that in this morning's charts I'm watching quite extensively. I see three camps right now, or three scenarios in this market. Those like me that believe fundamentals do matter and ultimately will manifest in the form of lower stock prices. But I also acknowledge that the recent turn down in economic fundamentals and a lot of indicators could prove to be transitory or brief aberration, in which case then that sets a pretty powerful underpinning in the market. You'll have the economic indicators start to firm back up, as well as the Fed already giving you rate cuts that weren't needed. So that's like pouring fuel on a fire that's already burning and doing well. You have a little campfire, let's say roasting marshmallows. You throw on some extra logs, you're going to get a pretty big fire, probably bigger than you wanted. So that scenario is certainly a possibility. Like I said, there's so much in the charts now that I just don't see the risk reward as being worth it. But if you're of that mindset, go long the SPYs for trend trade or QQQ or index funds or your favorite stocks, and just set a stop. That's what stops are for. And maybe there is another 10, 20, 30% upside in this market before we drop another 10, 20, or 30. That's possible. It's not my current view, so I'll stand aside. We're not short the Qs. I've been asked a couple times today, do I plan to? Maybe, but right now I can't make a case to. There aren't any decent sell signals in the market. And that brings me back to this first reply here to this question, are you going to add the MDCO? I've made a case on this stock. It's the same setup that we had back here. And in recent years where you get these divergent highs, this one trades very well to the technicals. Again, you can just, let me just get off topic here for a second. Go to the resources here. This brings you to the support center. And down on the bottom, you can search front page post by a ticker tag. And so if I type in MDCO, like I just did, hit enter, and it's going to bring you to any comments, anything that I've made on Medco. Looks like, I guess we traded it back here in 2013. First target hit, second target hit, and this was the most recent update here. You can see dated July 8th. I covered it in the short trade ideas video, and let's go back to the trading room, and I'll continue to talk on that. So back to the trading room, and click on my user icon there, and then back to the Medco chart. So again, there's the fact that we don't have sell signals. The rally has been resilient since the last drop that we had recently. What was it? The early June lows. We've rallied from there, and so it's made short trades very tough despite the technicals. So that's given me pause there. And this stock also reports in just a couple weeks. It's I don't have it in front of me. You can check that. Also on that, when you go into the resources, the right side of the chart support center, on that tools of the trade, I just down on the bottom, there is an earnings calendar, and you just type in the MDCO. It'll tell you the exact date. So what I said in the reply there was that typically stocks that are scheduled to report will go into a holding pattern in the days or just a couple weeks leading up to earnings. Why? Because who wants to take a position in a stock that can gap either way against you? So they tend to, not always, but often you'll see a stock kind of consolidate, flounder around right before earnings. Now, I will say this, that doesn't always stop me, and I may add this one as an official trade. And some of the comments I went on to say today in the trading room is the fact that I am so reluctant and kind of shell-shocked, if you will. In the last couple index shorts, QQQ and TVIX were stopped out. That's probably the reason I should be shorting right now. When you want to short, when it's easy and everything's going down and everyone else wants to short, that's when you don't want to be shorting. Sometimes that'll play out in the bigger trends, but it's the times where you think the market just is bulletproof and everybody else has come to that conclusion, which is right now. Everyone thinks, okay, Powell's got our back. This market can't possibly go down. The Fed is easy. I commented on that today, that not always, but very often in the past, after the first rate cut, second rate cut, that's usually about the time the market tops. The reason the Fed's cutting is because the economy is rolling over. So again, it comes back to, will the fundamentals catch up play out or continue to deteriorate, I should say. If they do, this I give you my word on. I make very few promises in trading and investing because there are no guarantees. But if this economy is going into a recession, if the economic indicators continue to roll over, you have my word, the market will play a violent game of catch up to the downside no matter what the Fed does. History shows that. Again, you can pull up long-term charts, look at rate cutting cycles. When the recession hits, if the economy continues to roll over, stocks will go down. And because of valuations being excessive right now, they have a potentially violent game of catch up to the downside. So big ifs. I can't promise you that we are going to see a recession this year or continued deterioration in the fundamentals. But if we do, rate cuts aren't going to save it, save the market, that is. All right, so that's that. Again, I will get back to you guys, and who knows, maybe I'll throw MDCO out as a trade idea, tomorrow, but possibly today. I mean, it's a beautiful looking setup right now. Let me get back to that. There it is. We had this price channel right here, trend line, and I'm doing this in case you didn't catch the last analysis. We had a breakdown in a back test, and the back test here has only extended the recent divergent high. It looks like this pattern here, where you had the comparable uptrend line, price channel there, divergence. The divergence extended after the breakdown. We went up a little bit, and then the bottom fell out. Again, I went over this chart in the Trade Ideas video. Wash, rinse, repeat. Look for these divergent highs. So I have a pretty good degree of confidence this stock will hit, at least one of these two targets here. But it's a matter of we have a very solid resistance level at 41.57, and there's certainly the possibility when they report, let's just say they beat, it would my expectation if the market or the market likes what they hear, you get a pop right after earnings, a pop that runs right around into or around this 47.60ish level, then reverses. That would still put in a divergent high. The divergences are still very much intact and will not be burned through anytime soon unless there was a huge move up. So here, and I'll have to do the math on it, and you will too if you decide to take it. You can take it now. Some of you probably have already. So what are we looking at here? If it pops up to that level, it's almost a 7.5% upside from here. And again, with the trend in the market being strong, like I said, I'm erring to the side of caution right now, but the downside is pretty attractive on that stock. And again, that's just one of many. I just wanted to update it. Next one up, this was a reply I just made to somebody about, Randy, are you going to make the TBT an official trade? And I said, tomato, it's how you look at it. Official trade, unofficial. But I went on to say this, and this is important. I do often say that official trades are those that I have the highest degree of confidence. However, the unofficial trade ideas come in all shades of gray. There are those that I have, the compelling, hey, I'll pass this along. It looks okay. I'm not taking it, but, it might develop. There's some trade setups. Huge difference between a trade setup and an actionable or active trade. TBT or TLT, for example, is an actionable trade for the reasons that I went over today in the video, on the bond video, and recent coverage on the ZB, the bond futures. And I've been harping on that one for quite a bit. I almost added it, as I said here, as an official trade before I left for vacation. I've shared that chart several times. I'll do it again here for you before I left and after. And, when I continually talk about something, it's obviously I have a pretty, I'm following it and have a pretty high degree of confidence in it. So it's starting to move. Again, these are the targets. T1, this downtrend line. T2 set just below the 32.14 resistance. T3 set just below the 33.10 resistance. Maybe a potential target, but I can tell you this would be my preferred swing range now. And again, I covered this and TLT extensively in the video. So my point being, here's one I have a considerable higher degree of confidence. In fact, before I left for vacation, I said that I had shorted ZB, the Treasury long bond futures, as a partial hedge to my index shorts, half of which I was stopped out over vacation, but I still have a fractional position. I'll leave it fractional for now, and I'm short treasuries. Now this is working out for me. So my index shorts have gone down, but I've made more than that because I have a much larger treasury bond position in a short. And there's an example, and I mentioned this. It's probably buried down in here somewhere today to somebody who said they were hedged, they were long ES or one of the index things, also hedged with a short on an equal position. And so, I wasn't clear if that was a long on ES and a short on ES at the same time. If so, the only person that profits off that trade is your broker, because you have two round trips, meaning a commission to buy open and a commission to close each position. So your broker loves that. You'll go nowhere. So when I hedge, I don't hedge directly, going short the same thing I'm long. Why do that? Just I'll close out my position, save the extra commission because I'm not going to go anywhere. However, I hedge on comparable positions, those with correlations, whether inverse or direct correlation. And so, my thought process was if the stock market continued to climb, my index shorts would go down. However, treasury bonds should then also drop because they are losing that flight to safety bid. If the market firms up, Powell's got the markets back, and that's what we're seeing. People are starting to sell treasury bonds because why do they need it? Stock market's going up, so that flight of safety bid's coming out of there. And there may be, also the component of, factoring in higher growth. If the stock market continues to go up right now, that seems to be the consensus, at least by the price action in the market. So if we're getting that great bullish scenario I talked about where the economy, these rate cuts stick, we get some more rate cuts coming up here soon, and the economy starts to firm back up, whether it's because of that or just on its own, well, guess what happens? The long-term economic outlook improves, which means treasury bonds will then, rates will go higher, bonds will go lower. So to me, it's win-win on that if that works out on the treasury bond short. So I wanted to mention that. And I know I'm kind of all over the place here. I told you it would be a potpourri kind of video of some of the things I'm watching here. So, okay, next one up, Netflix. Somebody asked me about Netflix. Netflix, my reply was it is just literally the stock has been like an ATM for printing cash since hitting this level. We shorted Netflix. I've shorted it 3 or 4 times in the last year, and at least 2 of those were official trades. I might add a third unofficial trade. Right here was the first time. The stock gapped down, and when it gapped down, I mentioned, but I watched it. I didn't want to chase it there. It pushed back that very day. It was an earnings miss or earnings miss or something happened there. And we nailed it right there on that bounce back to resistance at 38, 380, 381 level. We did it again here. I mentioned it several times since, and here we are again. So you can see all these white arrows without fail. Doesn't mean that pattern will repeat indefinitely, but look what happened every single time. And this one, look how much we milked. T3 hit. That was our final target there. We had the other targets here that we hit and got out on my final target. It wasn't like the first target was hit. We got out, and we did it again here, hit the final target, and I actually was able to reverse that to a long. So, some of these bounce backs to that level, produce smaller trades. And the way I see this one now is that we're boxed in. It's been a trading range, pretty darn good trading range. I talked about that I think in today's video with treasury bonds or something else. When you see these trading ranges, it's TA 101. You go long at the bottom of the range and you sell or go short at the top of the range. Watch, rinse, repeat stuff. So here we are at the top. Doesn't mean we can't pop above. In fact, if we do make an impulsive breakout, that's pretty bullish because that means it has broken out of resistance level that it has failed at on multiple occasions over the last year or so. But if the pattern repeats, then we're going to go down here. So you take it with a stop a little bit above, because in this market, especially with the trend bullish, I would almost favor a pop above that level to run stops. So if that happens, I might watch it, wait for reversal back down below and add it. May add it before then. You're welcome to take it if you like it. There's a minor trend line there as well. And that's that. And if we do get it and the market were to roll over, I would certainly have a first target somewhere around that support, the bottom of that range, but I may add an additional target down here on that one. Okay, scrolling down, there's an example. Somebody asked about my thoughts on PA. No problem. I did an update on PA Palladium futures this morning in the charts I'm watching, so I simply just posted a link and said that was a chart down. So again, I don't mind if you want an update on something. Oh, and the other way I showed you a minute ago, going into the support center and using that post by the symbol tag. That will work for silver members and gold members because it'll show you all front page posts. That was when I entered MDCO using that post by ticker. I tagged those front page posts. But in the trading room, you can use this search function here, and you type in. It's not cap sensitive. You can use small caps, and MDCO. You can see everything posted in the front page as well as the trading room. You see this, it's going to be a trading room post. You see a chart like this, it'll be a front page post right there. It's not all inclusive. I've got to configure this. It'll go back and show a couple months there at least. But that's more relevant in the trading room. Doesn't matter what Medco did 3 years ago, but I just want to mention you can scroll with the mouse wheel and zoom and go back in time. And again, you're going to see the trading room updates first and then the front page posts afterwards. So that's another way to find what you're looking for on the site. And of course, like I said, sort by whatever member you're following. You can also click follow that member if you click on their username and follow them, and then you can sort the post by all the people. So let's say you have 4 or 5 other traders, maybe myself included, you like to follow. You can follow those 4 or 5 and then come up here and then sort the activity stream by show, where is it? Following, right there. Click following, and that'll sort by everybody you're following. All right, so moving on, let's see. Wheat, I already mentioned that today. Again, there's an update posted in the, no, that's a front page post right there. Someone asked, I'll have to reply to that. Is T3 your next exit? I'll have to look at wheat. That was the final target before. No, I'm looking, that target's already been hit. I'm looking for more on wheat. Let me pull that chart up for you. WEAT. This was originally added and still is to me a long-term trade. I'm looking at what I believe to be quite likely, a little more evidence needed, but quite likely major bottom and maybe the end of a vicious bear market in agricultural commodities. If that's the case, there's a lot more upside to come in wheat. The charts support it, the long-term charts, not this is just a daily chart here, the long-term weekly charts. So the fact that we've already come up and done this, we hit the official, that last trade, I had the final target there. As I said in today's update, I was conservative and I was looking at futures, but this was a level that I had set it below. That was the actual resistance level, 594. That got hit. It got hit twice, and because it was my final, what I call final swing target within maybe a larger trend trade, that's where I exited, again, got out a little early. But as that's already been hit twice, and we've now had a correction and a nice consolidation. What that does is it resets the indicators. It works off these overbought conditions. It recycles the PPO back to you can see here in the 0 line. That's a trend indicator. So it paves the way for the next move up. So my expectation would be any reaction, if and when we get back to that $6 area on wheat, probably be minor, and we could punch right through there, maybe consolidate a little more. Either way, a solid break over that $6 level should open the door for more upside, and wheat again has been beat down like a lot of other ag commodities, and they're near coming off multi-year low in prices, and I think there'll be a lot of I think it's a trend that will continue going forward, the upside, that is. Okay, continuing down, I won't go too far. Just kind of give you an idea. This is day in, day out, and this kind of stuff. A lot of the trade ideas that come to the site are things that other members bring up. They'll ask me about something. Sometimes, in a lot of cases, I'm already tracking it. If it's a lot of stocks, I track literally thousands of stocks annotated. Sometimes I'll have to update a chart. Somebody asked me about V today, and I look at the daily chart of V. Here, we'll do it here. I'll show you. It's very strong. Look at the daily chart. You're like, why would you want to short that stock? There's the daily chart. It's strong. Unmistakable trend. Zero sell signals. I have to be very clear. Zero. So I wouldn't short it right now. But you can see we have nice negative divergence forming. The last time this stock had negative divergence, you can see it right here. Took a while. The divergence continued to build. As I always say, divergence is not a sell signal. You can continue as long as those divergences stay intact. Typically, the bigger they are, the harder they fall. So in that case, Visa fell. If I'm going to grab, I can't grab that trend line. It'll move, so I'm going to stop a little shy. That's about a 20% drop in Visa. There was your sell signal came on the break of this wedge. Look how clean that trend line was. Nice, clean. See all the reactions on it? That's what I call a clean, well-defined trend line. The fact when it broke down, it was impulsive. Everything you like to see in a short trade. And there you have, once again, you have a wedge. You had a trend line here, it broke down, but it led to more of a consolidation. There was a drop. It was a tradable drop, probably 5% or so, but we consolidated and then broke above that consolidation range. This is what I talk about a lot when you're trading. Look for stocks making, in areas of consolidation. This could have went either way, could have broke to the downside, and that's what you need to respect, whichever way it breaks. But in this case, it broke to the upside, which is bullish, continued the trend, and as you can see, the stock has now formed this smaller rising wedge, and the fact that it has a divergent high tells me to be on the lookout for a short trade. If we didn't have the divergent high, if the indicators are making new highs, and they could soon, then you might want to just continue trending this stock, trading it up, buying pullbacks to the trend line to support. But this is what makes me flip from bullish to bearish, is when you start to see the divergences, overbought conditions, things like that. And again, to keep it very simple, an objective short entry would come, I don't have anything on the 60-minute chart, on a impulsive break of the trend line, and you might get it before if you had let's say a bearish engulfing candle, maybe a 2-3 day candlestick reversal pattern. So that's one of many trade ideas on Visa. I believe what I said, and if I didn't say it, I'll say it here. My preferred swing target, this is more of a zone. There are two levels in close proximity, about 165.70 up to 168.20 or so. So call that T1 zone, if you will. I would expect something like that. A bounce reaction off anywhere in that zone, followed by another thrust down, especially if the broad market rolls over. This is why I always talk about how the charts are dynamic, and so is my analysis. So let's take this trade, for example. Let's say I end up shorting this one on a break of this trend line. And let's say that it's coming up on this target. At that point, when and if the stock were to approach that level from above, I would look at the broad market, because Visa is a top component of the S&P 500. It's in I believe it's also one of the components, XLK, the tech sector. I think that's where they put it. So, credit services, but if I'm not mistaken, it's in XLK as well. So here's my point. How does the S&P 500 look at the time? How does QQQ and XLK look? If I can't make a case that they're bearish, and they're likely, let's say they've already broken down and they're headed, looks like they're heading lower. If that's the case, I may not try to game a reaction, and I certainly may not close a trade out here. However, if at that point that Visa does, let's say it does play out, it's coming up on this level here, and the broad market looks strong, it's going up, I can't make a case to short the broad market, and especially if I can make a case to be long in the broad market, I would certainly close that trade out there. So that's why I list multiple price targets ahead of time. So if I put this trade as an active trade, I'd have T1 somewhere in here, T2 just above that level, and again, whether I close that trade out at T1 or ride out for the move down to T2 will depend on how both the charts of Visa as well as the broad market or any sector that it's a component of look at the time. And maybe even MasterCard, American Express as well. How do they look? Because birds of a feather flock together. Okay, we'll just do a few more, and then I'll try to scan, see if there's any that really stand out. This is just an update on NQ. I'll do these midday. NQ was that's that wedge I posted this morning in the charts I'm watching. I mentioned it was there, so it was at 2 levels. Too important. I probably reversed. Yeah, reversed somewhere around there. Came to back test at 79.07. Remember that was the breakout point right there. There were reactions there off to the left of this chart now. Quite a few reactions there. Key level. So you had a back test of dual or pullback to dual support levels, uptrend line plus that key 7907-ish area, and that's about I think where we bounced today. Yeah, right about there. All right, so next one up, somebody had mentioned something about what was that stock? AIMT. That's right. And if you remember, I threw a lot. I try to do a good job of this, throwing a lot of caution out on certain trades that have a lot more risk than others. You know, you trade Pepsi or you trade Walmart or TLT, you're not going to get whacked with a 30% gap against your position or a big move. You trade biotechs, especially small biotechs that have all or most of everything that they have riding on one or just a couple drugs in clinical trials, and that's what AMT had. I told you, peanut drug, and for a drug for peanut allergies. And so this was a big move down, and it may be a washout move. Now the charts are still constructive, and that's somebody asked about it today, but I said I'd want to see reversal here. So we broke out the other day, came back in, and then boom, we got hit with the headline. I posted an article right here. AIM immune down 7% on cautious ICER report. Blah, 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 blah. You could read all about it here. It tells that they came out. This study came out, or this report. So that's going to knock it down. Fundamentals definitely matter almost more than anything in biotechs, and it's that sudden news. And again, you have a big company like Amgen. Amgen's got a big pipeline. They're not going to get clobbered on bad news on one drug unless it's a blockbuster. They might have a potential blockbuster in clinical trials. You need to know. You need to know your companies, especially biotechs. Let's leave it at that. All right. So next one up, X is U.S. Steel, and somebody asked about what that's going on there. I posted U.S. Steel. What would have probably been in the trading room as a setup back here. You can see that was June 4th, and had it going up here, breaking above this bullish falling wedge, coming hitting the 1538 target. A reaction. Anytime I have line breaks, that means I don't zero it out here, but it means a pullback, reaction on that level, which is a pause or consolidation, and then another thrust up. So that was what was that? June 8th. Stock was about 13% back then. I'm sorry, 13.29. And where did it go? And this is it. This is the updated chart. So this is this is how I swing trade. Broke out. I'll say this, I didn't take this one. It fell off my radar, passed it along, but it went up almost perfectly, hit that target, hit it again twice, consolidated. There's a consolidation, there's a pullback. And, it's pulled back to support. So it looks like an objective long here for the next ride up. And, there's some support there. So you do that with a stop somewhat below. First target's already been hit, doesn't guarantee the second target will be hit, but that's the, still the outlook I have for U.S. Steel. Okay, let's do two more and we'll wrap it up. Again, this is just today in the last few hours. This is kind of stuff going on in the trading room. And again, I share this because silver members might have an interest in these stocks, so I'll try to make a point to do this time to time. And again, here's a reply. Somebody asked me about Merck. Drug stocks are down today. The thing was Trump administration came out and said they are not going to stop the rebating. I'll call it a scheme. But I've talked about it before. The rebates that the big PBM pharmacy benefit managers do, it has to do with pricing to drug companies. You're charged X amount, they pay X amount, but they give the pharmaceutical companies give these big rebates to the PBMs. Again, you can look up into. Anyways, they came out. They're not going to. So that was bullish for the PBMs. So like UNH, for example, is a PBM. They pop big on the news, but it's not good for the pharmaceutical companies. So Merck broke down. So it was news induced, but technically driven. As I often say, the news and the charts go hand in hand. Usually it's priced in the charts. You can see here, here's my daily chart of Merck. we had a very clear, well-defined trend line and a divergent high. And there's another example. These divergent highs, they work. You can trade them in an uptrend, make a lot of money at trading against a trend. Divergent high, correction, divergent high, correction, divergent high, boom. Breakdown today. I said minor zigs and zags aside. I don't know exactly how the squiggles go, but I see this one before all said and done coming down to at least the 76.70 level. And quite possibly, if that level goes, you get a reaction off there, bounce. That'd be my first target. If 76.70 goes with conviction, ideally after a bounce or consolidation, next target would be 72.13. And then last but not least, I posted an update in the trading room. Again, I posted this on the front page today. That was a front page post. Oh, so there it is. I'm sorry, that came through in the trading room. When you're in the trading room, by the way, if you click on a chart, it's not expanding, you'll look up here, it'll say right side of the chart, wrote a new post. That means that's a front page post. You can get to that by either clicking on the post title. Right there would take me to, well, we'll do it here, front page post. And that showed the update. This morning I showed you this rising wedge pattern. I said that natural gas was coming up to resistance. I had stated I've been long natural gas most of this trend. At that point I put a tight stop in there and then reversed it on the break of that trend line after I was stopped out first, and then took a short trade. So this was a trade here. You had that beautiful little rising wedge confirmed with bearish negative divergence, and boom, you can see once we broke down, that was it. 2 and 2. I already shut that program down. Let me see how low nat gas went. Okay, I had to load that chart. That was 239. So basically exactly 2.388, so close enough for government work, almost a perfect hit of that level. And that's a couple takeaways. That was a quick short trade, short trading op, and also to book profits. Like I said, set your stops no less than below that level if you've been riding this long, to avoid the give back. So that's again, that one actually I made it on the front page because I know a lot of people have been tracking that. Or you could have went into, as I said before earlier today, degas. So this is that same trend line there on the futures. You had this trend line like this. It's in reverse. Remember, degas is the inverse bearish ETN. So from the point it broke out, if you jumped on it and had an order there, that's about 8%, quick 8% day trade. So that's why the stock market is boring me to tears right now. The stock market, as I mentioned today, what do we have? The wheat trade set up that I mentioned as a objective long yesterday popped about almost 3.5% today, which I took a look. That is about exactly what the stock market has done. How much it's gained in the last over a month now. So there's a lot more opportunity, my point being, in these commodities, especially now. The market is going up. It's a resilient trend, but it's going up very slow. It's and again, a lot of red flags flashing. All right, we'll wrap it up here. I could sit there and go down the line all day long, but I just wanted to kind of go over that to show you both how to find some things on the site, what you're looking for, as well as some of the things that stood out to me today that I might not have covered on the front page, like this one. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.